We are Banking Quest and we build careers in banking. So our vision is to be the most preferred partner in the BFSI segment for transformational skill development, enabling organizations and individuals to achieve their goals. Our mission is to work with the leading banks in the country to provide effective learning and solutions for capacity and competence building. Banking Quest is founded by senior bankers with a proven track record with a single-minded focus of developing next-generation bankers. We pride ourselves on our distinctive and differentiated content and delivery with a focus on practical aspects of banking functions. We work with leading banks in the country to provide effective learning solutions with our pan-India delivery capabilities. In our advisory council, we have Mr. Mohan Tansale, who is former chairman and managing director of Central Bank of India and chief executive of Indian Banks Association. Professor Rajiv Kishore Dubey, former chairman and managing director of Canara Bank. Mr. Bhaskar Sen, former chairman and managing director of United Bank of India. Mr. Hargovind Sachdev, former general manager of State Bank of India and head of Central European Credit Desk at Frankfurt, Germany, and Mr. Tilak Gulati, who is the Chief Executive of Banking Quest and also former Principal of Staff Training College of UCO Bank. We have trained more than 5 lakh bankers so far. We have trained officials of 50 banks, including public sector, private sector, small finance bank, regional banks, foreign banks, and payment banks. Our interbank training programs receive overwhelming response across banking fraternity. We have capability to deliver both classroom and online programs across India with best-in-class faculty. All programs are designed and developed based upon in-depth training needs and skill gap analysis of junior, middle, and senior management segments. In the process of rapid expansion, we are venturing into delivering customized and niche training programs encompassing entire BFSI sector. We have multiple programs, including programs on risk management, data analytics, foreign exchange, credit management, treasury, IT digitization, blockchain, soft skills, ethics, and today's program is on AI in banking. We have capability for large-scale pan-India training rollouts. We have holistic evaluation, pre- and post-program assessment, and comprehensive post-program reporting. We have end-to-end program management capabilities. We have a pool of highly experienced faculty having functional and operational experience in banking domain. We have a practical approach towards training with a moderate stress on theory. We design customized training programs based upon specific requirements of the banks, and we have multi-location on-site delivery on demand. We are serving 96 large clients, including HDFC Bank, Canara Bank, Union Bank, and the list is on the screen. All right. We are located in Gurgaon. I'm Varun. I'm the president and CTO at Banking Quest. You can reach out to us at info@bankingquest.com. And also you can visit our website, www.bankingquest.com. And now a very warm welcome to Mansi Gupta, who is here with us. Mansi Gupta is an experienced professional with a strong background in data science, AI, and machine learning. She has worked on complex analytics and AI projects, applying advanced techniques to solve real-world business problems. She is passionate about leveraging technology for innovation and knowledge sharing. Mansi is currently a senior data scientist at Nokia and founder of AIQuest.in, where she regularly conducts workshops to empower others in the field of AI. With that, a very warm welcome, Mansi. I would request you to please take over and start the deliberations.
Thank you, Varun. So, hi, good morning, all. And I'll just start sharing my screen so that we can take forward today's session. So, thank you all for joining us for today's session on artificial intelligence in banking. And as we all know that AI is no longer a future concept for banks, it is already shaping how financial institutions serve customers, manage risks, and make decisions. From chatbots to handling millions of customer queries, to AI-driven credit decisions and much more decision-making, AI is already transforming both front office and back office operations. So in this webinar, we will explore where AI is being used in banking today, how it delivers speed, accuracy, and cost efficiency, and what it means for our customers, employees, and regulators. So to begin with, just to warm up the session for all of us, I've planned a small quiz where I'll share the link in the chat window right now with all of you, and you have to guess who. So we have four options on screen: chat reply from a bank chatbot, handwritten customer note, a credit decision report snippet, and a voice clip of a customer service. So you have to help me point out which of these do you think is AI. So I'll just put the link to the chatbot in the screen. Okay, thank you. So I have the responses now, and most of you have replied chat reply from a bank chatbot. And then some of you have also mentioned handwritten customer note. So we would discuss during the course of the webinar that how handwritten customer note is an AI product or not. But yes, chat reply from a bank chatbot is definitely an AI product. So yes, thank you. So let's start with the history of AI, how AI has evolved through the lens of banking. We will start with the beginnings, the 1950s to the 1970s. We also call it the idea of the thinking machines. So in the 1950s, thinkers like Alan Turing, they introduced the idea that machines could simulate human intelligence. In the banking, this era was not about AI as we know it today, but about automation using mainframe computers. And moving on, in the 1980s to early 1990s was the expert systems era. Here came the rule based or the expert systems. Here, the intelligence was coded as if then rules designed by human experts. In banking, this translated into early credit scoring models, fraud detection systems based on predefined transaction rules. These systems were rigid. They could not learn or adapt on their own as we know the AI systems today. The next was a major boom. The machine learning emerges in the 1990s to 2000s. This was the phase where we started learning from data, and this phase marked a major shift. Instead of hard coding rules, systems started learning patterns directly from data. Banks started using machine learning for various use cases like customer segmentation, risk modeling, cross selling, etc. And then came the big data and AI boom in early 2010s. That's where we have predictive banking. And here we saw an explosion of big data, cloud computing, and deep learning. AI systems became powerful enough to detect frauds in real time, analyze millions of transactions instantly, perform pattern recognition. This is where AI began to outperform humans, especially in tasks and especially in speed and accuracy. Then came the responsible and generative AI, which is 2020s to present, where we are seeing human and AI collaboration. Today, we are in the era of Gen AI and responsible AI. Banks are using AI for chatbots, virtual assistants, process automation, decision support, etc. And then the future, something that is coming 2025 and beyond. We will see more of agents. I suppose all of you would have heard about agents. So we'll see autonomous and explainable finance. We will see looking ahead. AI in banking will become more autonomous, multimodal, and transparent. We will have AI co-pilots for relationship management, fully automated yet explainable loan underwriting, voice-based banking experiences, and stronger regulatory frameworks for AI governance. So the goal is not to replace humans, but to create trustworthy, explainable, and intelligent financial co-helpers. So this is how the AI has evolved from 1950s to and expected to evolve, go further beyond 2025 as well. So what is AI in banking? While we always don't see AI directly, it is working continuously in the background, analyzing data, detecting patterns, and enabling decisions at scale. Just like you can see in this visual, there are layers and networks. AI in banking also operates across multiple systems, channels, and processes. Today, banks are generating massive volumes of data from transactions and customer interactions to market movements and risk signals. AI is an intelligent layer that connects all this data and turns it into actionable insights. So it is not just about one tool or one model. It is about an ecosystem. Entire banking ecosystem is changing with the data algorithms, pipelines, and decision engines. All of them are working together. As we move forward in this session, please keep in mind that AI is no longer an add-on. It has become the core infrastructure, like internet, like Wi-Fi, like electricity, and it is being used widely in the banking sector, like in the customer service. You can see, all of us can see chatbots everywhere, not just in banking but everywhere. So in banking, it is also used in fraud detection, credit decisions, personalized banking, and process automation. So why does it matter? Why it is important to have AI in banking or for anywhere else that matter? It helps reduce risk, improve efficiency, and enhance customer trust, empowering the employees to focus on higher value human tasks. So we can avoid doing the repetitive tasks, the admin tasks, they can be just handed over to AI. And humans, the employees, can focus on higher value tasks, which require their attention. So now comes the interesting part at how AI works. AI works with the data. So first step for building any AI system is data collection. So we are collect for banking, we are collecting data like transaction records, credit histories, customer chats, etc. So for example, feeding thousands of past fraud transactions into the system, and then AI system learns from the patterns and relationship in that data. So for instance, if you feed it the past fraud transactions data into the system, into the machine learning system, it will learn the patterns. It will see that how fraud was occurring in the past from thousands of transactions. So it will try to understand on its own what is normal, what is versus what is suspicious. It will try to understand what was approved, what versus what was rejected. Similarly to how our brain learns what is right or what is wrong. So AI system, just if you really want to understand how an AI system learns, is you can imagine a baby learning to recognize a cat. So how would a baby recognize a cat? It would, the mother would point out several times that this is a cat, this is a cat, and eventually the baby would learn that this is a cat. This is how AI systems are also learning. So from the data that we are feeding them, they learn to recognize patterns, and they learn to differentiate the right from the wrong, just like human brain learns from the experience. And once they are trained, they are able to predict decisions or predict outcomes for new cases. For example, a system can predict whether a new credit card transaction is suspicious. And like human brains, it can continuously improve. It keeps learning from new data to improve accuracy. So if the patterns are changing, the models are going to adopt automatically with the newer data. So this is the beauty of the AI systems, the way they work with the data. Now, why AI matters for bank employees? It enhances your daily work. So with AI, you can automate repetitive tasks like data entry, verification, reporting, and it frees up time for relationship building and customer interaction. It improves decision making. So AI gives data backed insights on customer risk and products, and helps you make faster and more accurate lending or service decisions. It strengthens risk and fraud control. It detects suspicious patterns and alerts even before the fraud occurs. So it helps the compliance team monitor transactions in real time, empowers human and AI collaboration. It is very important to note that AI acts as a co-pilot. It's not a replacement. Employees can use AI tools for advice, recommendations, and efficiency. Front end still remains with the human beings. And working with AI, it helps human beings build skills in data literacy, digital tools, and analytics. Keeps you competitive in a rapidly transforming financial sector. I would like to ask the participants which part of your daily work you think could AI make easier.
See, I think it is a general query, means in a form of FAQ, because
Yeah.
generally customers have a certain set of queries to ask. And this repetitive type query means what generally we say FAQ. I think it is a most used in this for that form, that purpose.
Okay. That's a fair response. I agree. Anything else from anybody?
Hi, I'm Maninder.
Hi, Maninder.
मैम मुझे लगता है मैं थोड़ा सा नेगेटिव बोलने वाला हूँ.
हाँ जी, हाँ जी, बोलिए.
Don't we feel this we are too optimistic regarding AI? We are talking about the AI won't be taking the jobs of human beings. For example, we can take the help for making decisions in the
Hmm.
banking sector. If an employee can take the help of AI, then why can't a customer take the help of AI?
But you are the decision makers. I mean, if a bank has to disperse loan, what is customer? I mean, customer is coming and asking you for a loan. AI would help you make a decision that whether you can grant particular loan to that customer or not, based on their credit risk history, based on their transactions in the past, and so many data that human also studies before making a loan decision.
Yeah, that's okay, but yeah, that's okay. We
So
can
what?
plan.
Yeah, what kind of, I mean, it depends on the situation. What kind of decisions are we talking about? So when we are sitting in a banking, when we are talking about AI and banking, there are a lot of decisions which are backed by data. So AI helps you in making quicker decisions, rather than scrolling through files. I mean, we have a lot of experts. I'm sure we have a lot of banking experts on board who can answer this question better. But then a lot of decisions require a lot of data wrangling.
Yeah, I was reading one article. It was of the data of Bangalore city.
Okay.
So in that article, it was written that so many people, as आजकल तो ये चल रहा है ना, बहुत सारे बंदे डिप्रेशन में हैं
Hmm.
और कुछ ना कुछ they want to talk to somebody.
Yeah.
And most of them, majority of the people, we call the literate people, they are they are taking the help of AI instead of going to directly psychologist or the psychiatrist.
Yeah.
यहाँ
So
पे मुझे लगता है कि कुछ ना we are becoming too
definitely. So there are
yeah,
positives and there are negatives. So
yeah,
we can't, every coin has a two sides, and so has AI. Yes, people might be approaching AI for emotional guidance, for seeking for something that they cannot discuss with everyone. So just go and talk to an AI system. So definitely there are negatives also. I completely agree, Maninder.
Yeah, Mansi, can I add something?
Yes.
See, I would like AI to help bankers in finding out, like they have in credit, taking a decision on credit, like they have a number of documents which the
Yes.
borrower gives. So if AI could help them find discrepancies or the anomalies in those documents.
Yes, definitely. And I think AI is already working in that direction.
Okay.
So I'm not working in the banking sector, but maybe people who are working already in the banking sector can confirm that definitely there are some banks like Bank of America, HDFC, where this is already in place.
Okay, that would be a big help to bankers, I think, in making faster decisions. Yeah.
Yes, I would also like to add, when technology came the first time, in 1990s, when there was internet and people were scared that people are going to lose jobs. But when we are looking back at 1990s now, today, and we see how many more jobs it actually created than people losing jobs. So
Definitely.
back then, we could never think about these possibilities, that what kind of new jobs would be generated. And this was kind of alien to all of us. I think it is the same with AI. So AI is filling the void in the businesses, where the business can actually do things more effectively if humans were to do everything, because the scale of the operations are so huge that human beings cannot fill it. So AI will fill the void, and when there will be operational efficiencies, I think there will be more jobs eventually. But right now, it may be difficult to foresee, but gradually it will unfold into like more jobs being created actually.
Yeah, definitely.
Yeah, I will also like to supplement. When computerization came in banking, it was a apprehension that computerization will take away the jobs from the banking. but ultimately jobs increased. Same way when AI is coming, so AI is helping banks to take faster decisions. So when banks take faster decision, business will grow exponentially. So this is how I think that AI will not take away the jobs, rather it can increase the jobs provided we use it efficiently to increase our efficiency. Yes.
Thank you.
Greetings, everybody. I am Samir, been a banker for a long time, and Mr. Gulati has been very generous and kind in allowing me to attend these sessions. While it's very very rightly said that AI and computerization, like what Mr. Gulati mentioned, that banking jobs have increased. But if you really look at it from a perspective that jobs in the banking sector have not increased, please understand where I'm coming from. The people who developed the softwares like Infosys, Wipro, Tata, who have become absolutely, job creating machines, their jobs have increased. Number one. Number two, jobs in banking have increased because RBI has given licenses to so many number of people. You had, the traditional banks, then you had private sector banks, and then you have, your small finance banks, so far, so not. So the job creation has increased thanks to the economy and thanks to the regulator. But jobs in the banking sector have not actually increased as much as they should have increased. Rather, the jobs in the IT sector, that has increased. So that is something which we as bankers, I'm not yet retired, but that's what we as bankers have to be consciously aware of. There will definitely come a time when there will be challenges. For example, I was in the underwriting side, and we virtually had just 2-3 people giving out loans for about 100-200 crores. Right. So that's my thought, which I'm parking. You may continue, ma'am.
Okay, thank you, Mr. Samir, for the insights. So yes, we would like to hear both sides of the story, good and the bad. Good to hear. Okay, thank you. So I'll get back to the presentation now. So now, thank you all for this interaction that you showed during the last question. It was helpful. And now moving on to how AI is used in banking today. So we have various spheres where AI is used in banking today, like customer service, like fraud detection, credit scoring, personalization, automation of KYC and data entry, and predictive insights. So I'd like to show you a small video from YouTube before we move forward.
Hello and welcome to the session on Big Data and Artificial Intelligence. In this session, we are going to learn about Erica, the AI-driven chatbot from Bank of America. Launched in June 2018, Erica is an AI-based virtual financial assistant available exclusively in the mobile banking app of Bank of America. It combines natural language processing, AI, data collection, and analysis utilizing a massive infrastructure. Erica is able to have human-like conversations during client interactions and helps users stay on top of their finances. Erica offers Bank of America customers a wide range of functions with deep integration into the bank's product offerings. The AI-driven virtual financial assistant reports weekly on the client's financial situation, answers questions on revenues and expenses, monitors recurring charges, views balances across all their accounts, and even reaches out to offer help if a user's balance is at risk of going below $0. A central part of Erica's functionality is its integration with credit and debit card products. Clients can use the AI-powered virtual assistant to request and activate a new card, replace a lost or stolen card, or block an existing card. Additionally, Erica gives users access to its associated rewards program, helping them enroll and offering assistance if they have any further questions. Through Erica, users can directly redeem earned bonus points, Examples of available rewards include loan interest discounts, savings interest boosts, or discounts on custodian fees for investment and trading accounts. As a member of the Zelle payment network, Bank of America has also firmly integrated the Zelle service into Erica's platform. Customers can use the virtual assistant to make real-time transfers to US bank accounts, check on the status of transactions, view payments, and cancel pending payments. Furthermore, Erica is integrated with the FICO score program and notifies clients in case of credit score changes. Moreover, Erica helps clients to make investments on Merrill Edge, a financial platform owned by Bank of America. The AI-based virtual assistant assists Merrill customers by offering insights on portfolio performance, trading, investment balances, quotes, and holdings. In addition to all the services already mentioned, Erica informs users when a merchant makes a refund. The virtual financial assistant also enables the receipt of bill reminders when payments are scheduled to be made and even notifies customers when duplicate charges occur. The success of the AI-based virtual financial assistant is reflected in its usage numbers as more and more customers are turning to Erica. The number of customers Erica has interacted with reached 24.6 million since its launch in 2018 until 2021. In 2021, total Erica interactions with clients increased to 427 million, which is up 217% compared to 2020. Erica is useful beyond the benefits it offers Bank of America customers, as it helps employees of Bank of America to deliver efficiencies and reduce manual interventions for client-facing teams. For instance, the Erica-driven Banker Assist internal platform reduces the workload of global banking teams by 40,000 hours per year. Erica continues to gain knowledge, continuously improving its real-time answers to any question. For instance, at the beginning of the pandemic, Erica learned 60,000 COVID-19 related terms and questions, which helped clients to get instant responses to many of their pandemic-related banking questions. Compounding on their success, Bank of America plans to expand Erica's range of services even further. For instance, it is planned to offer Erica in online banking as well. Furthermore, Erica is at the beginning only available in English. However, it is expected that more language versions will be rolled out at some point in the future. Erica has a dedicated team of Bank of America that is regularly working to enlarge the capabilities offered. All conversations with the AI-powered virtual assistant are recorded and saved for 90 days to ensure quality and identify further opportunities to improve and make Erica's responses more helpful. Erica has proven to be an important channel for delivering significant information to customers and efficiently responding to their questions and issues. According to Bank of America, the success of the technology has also been proven by client feedback. 90% of Erica's users say that the functionality is convenient and assists them in saving time and money. For Bank of America, Erica creates opportunities by serving as an efficient interface within the Institute's banking app. Flexible, direct service increases customer satisfaction and loyalty, while additional cross-selling potential is created through integrated products and services.
Interesting video about Erica, which is the AI assistant for the Bank of America, clearly shows how AI is penetrating each and every sphere in the banking sector. and how Bank of America is being one of the leaders in using AI in banking already. And let's see that how AI is being used in banking in various sectors. So as the AI revolution is quickly accelerating, its impact has been felt across multiple industries, including the financial services. It's a new world, and businesses are wondering how to navigate this technology. So now there is a big question being considered by the bank leaders. How will AI transform banking? For employees, we have augmented intelligence, which aims to support human tasks with AI powered tool and assistance. And it's a good place to start. So there are various areas like customer service where we have chatbots, virtual assistant, and voice bots. I think this is an area where all of us would have made at least one encounter. And we have HDFC's Eva, which is answering around 3 million plus queries per month. And then we have fraud detection. So machine learning is analyzing transactions in the real time. It detects unusual behavior, flags suspicious transaction instantly. For example, AI is able to identify the card misuse patterns in seconds. So there was question about fraud detection, and here we have this example that if we talk about credit card transactions, so sometimes credit cards are being misused, are being mishandled by fraudsters. So in this case, if there is a transaction happening which is not your usual transaction, which the pattern is not similar to your usual transaction, AI system would identify it in real time and the customer would be alerted, and banks can take relevant steps in time to avoid these kind of transactions. And then we have the credit scoring. AI assesses risks using multiple data points like salary, spending, history, digital behavior. And also, it is not just limited to your own data. It takes into consideration the macroeconomic factors as well. So with this kind of AI intervention, we have faster loan decisions, fairer scoring for new to credit customers. So microloans can be approved in seconds with the help of AI. And then we have personalizations. It recommends products or saving plans using customer data. So we'll have customized financial advice, improved cross-selling and engagement. Automation, with the help of AI and robotics process automation, repetitive back office tasks can be handled very easily, and it helps reduces manual errors and also speeds up the onboarding. For example, AI verifies the KYC forms automatically. Predictive insights, AI forecasts customer churn, loan defaults, or service needs. So with the help of predictive technology, AI can alert a relationship manager before a client stops using services. So it can detect patterns, and based on it, it can identify the churn or identify, whether a customer is going to stop using services. So these are just few examples how AI is used in banking today and how AI is quickly revolutionizing the banking industry. Okay, now that we have talked a bit about AI and how AI learns, we have another quiz for you where you will have to tell which of these scenarios are AI based and which of these are manual. So I'll put the link in the chat window. Okay, I can see we have 6 players here. So we have just 5 seconds remaining now. Okay. So software checks KYC ID using facial match. Most of you have answered this. Yes, this is AI. And then we have the HR emails you manually about training. This is not AI. Spreadsheet calculates totals automatically. This is not AI. A system suggests a loan offer based on transaction patterns. This is AI. So this is an AI. So a system is suggesting a loan offer. It is studying the transaction patterns. It is studying the data, history of the customer. Teller updates the address manually. This is not AI. So it is mentioned that address is being updated manually. ATM dispenses 5,000 rupees. This is not AI. And then chatbot answers credit card query. This is AI. We have app predicting your monthly spending. This is again AI. So prediction is happening based on your historical data. So this is AI. Okay, let's get back. Now we'll talk a bit about responsible AI and ethics. So, in December 2024, RBI set up a committee chaired by Dr. Pushpak Bhattacharya to set up the AI frame. So when we are using AI, it is important that we have the guardrails also. So this committee was set up specially to set up the AI frame, which are the guardrails for using AI in Indian banking. RBI has strongly suggested India needs multilingual and domain specific models. India has chosen pro innovation with safeguards, where AI adoption is promoted, but risks are supposed to be managed. So, why ethics matter in AI? So, as we all know, AI adoption is growing rapidly in banking for various purposes. And with great power comes great responsibility. Biased or poorly monitored AI can harm customers and the bank's reputation. Ethical AI ensures compliance, fairness, and trust in banking operations. So let's talk about the key principles. Fairness. So AI models must not discriminate on gender, age, caste, religion, or any other sensitive attributes. Regular bias checks are essential. For example, a loan approval model should give equal opportunity to applicants with similar financial profiles. Explainability. AI decisions should be understandable to employees and regulators. So, if a credit scoring model is rejecting a loan, the bank should be able to explain the key factors behind that decision. So, the AI models should not work as black boxes. Unbiased decision making. Training data must be representative of the population. So, historical biases like past discriminatory lending practices should not propagate through AI models. We should give fair data to the models so that there is no biasness in the decision making. Customer data, all the KYC information must be handled securely, and there should be compliance with RBI and data protection guidelines. Banks should follow RBI and other regulatory guidelines on ethical AI deployment. We have an AI frame for Indian banking, and regular audits and model validations are necessary to maintain the compliance. And last but not the least, the human oversight. Employees should verify AI outputs. AI should assist, not replace human judgment at all. For example, an AI system may flag a loan as high risk, but the loan officer should review the case before that final rejection. So maybe a small interactive quiz. Would you trust an AI system to reject a loan application without human review? I'll not take the quiz route, but maybe we can discuss it. Maybe a quick 2-minute discussion around this. So would you trust an AI system to reject a loan application? Before we move on to the next slide.
Yeah, Mansi, perhaps no.
Okay.
Because we can't totally rely upon AI, because bank has to take decision based upon many factors. That
Yes.
how much risk appetite bank is having, and in which sector bank wants to go. So all these factors are there. We
Yeah.
cannot be totally like objective that is as per this parameter loan application is qualifying, then we will select it. But
Okay.
depends on many other factors also.
Okay. Thank you. Yes, I think that's.
Excuse me, Samir again. I
Yeah.
second respected Gulati's point of view, because AI will only be confined or restricted to the data which it is having access to.
Definitely.
Correct.
Definitely.
So we are speaking about a dynamic situation, right? A dynamic situation arises when the AI has got data which you have put in. That is all AI knows. But the subjective matter remains with the signing officer, with the underwriting officer. So,
Exactly.
in my personal opinion, and I may please be excused for my radical thinking process in the banking infrastructure, space, that too much of importance is being given to AI. Right?
Mhm.
there has to be subjectivity when you are dealing with loans, we're dealing with human interaction, when you're dealing with people, there has to be an element of subjectivity. Otherwise it is like, managing something actively and managing something passively. So
Yes.
when you're talking about managing things passively, that is when AI comes into picture, that we don't want to have any interaction, and passively we have created this particular model and AI will manage everything. But as what Mr. Respected Shri Gulati ji said, that there has to be an element of subjectivity.
I completely agree with both of you. Yes,
Yeah,
definitely.
yeah. Well, I'm Satinder Gupta. I want to add a little more to what Mr. Gulati and the my other colleague has told. In fact, there is a guideline, that is a fair practices code by RBI. Whensoever we are rejecting, we are to cite the reason also.
Yes.
So therefore, simply relying on that, yes, your application has been rejected because our system has not, that will not cut the ice. So therefore, that is to be validated why it has been rejected and what is the reason, whether that is a potent reason or not, and therefore the human intervention has to come. So that is what I wanted to say. Thank you.
Okay. Thank
Yeah,
you.
Bhuttaji, but you may also want to keep a note of this, that in the recent parliament meeting, there was a decision, I don't know if it is passed or no in the well, that, credit rating agencies, they have to tone down, or the bankers have to tone down their, dependencies on credit rating agency. We're talking about, CIBIL score.
Absolutely.
Am I
Yeah,
right,
yeah. Yeah,
Bhuttaji?
yeah.
Dasso
Yes.
tusi, dasso, gal.
नहीं नहीं बिल्कुल ठीक किया तुसी. You are absolutely right.
Correct.
I mean, many a time it has been found that whatever has been rated or the ratings which have come, later on it was found that it was full with the unwanted things and all that, and even then the ratings were given better. So therefore, yes, that is an indication. When we are getting from AI, that is an indication to which direction we should work, and then that is to be validated by the person who is sitting there.
Yes.
ਵਧੀਆ ਸੀ, perfect.
Yeah.
Yes. So
Thank you.
AI is there to help in decision making. It is not supposed to be the decision maker.
Absolutely, absolutely. This is what I'm. Yeah.
Okay, so we'll talk about a bit about AI in the risk management. So this slide is highlighting how AI enhances risk management across the bank. They're not replacing, the aim is not to replace the risk team, but augmenting oversight and speed. For the operational risks, AI continuously monitors processes, transactions, and user behavior. It flags anomalies in real time, helping identify errors, control failures, or potential frauds. In credit risks, AI model analyzes borrower behavior, repayment history, and macroeconomic indicators together. This allows banks to assess default risk more accurately. For the market risks, AI is supporting advanced scenario analysis and stress testing. It evaluates interest rates and liquidity exposures under multiple conditions, giving risk teams proactive insights rather than post-event explanations. So they can do some, kind of stress testing, evaluate various scenarios, so the team can get a proactive insight. Finally, in the regulatory compliance, AI helps tracks policy breaches, monitor transactions against regulatory rules, and generates audit-ready reports for regulators like RBI. So, and I've been talking about this example quite a few times now. A bank can use an AI system to detect unusual transaction patterns, preventing potential fraud before the losses occur. AI in portfolio management. So now with this slide, I will talk about how AI is transforming portfolio management from investment selection to scenario planning. So at the foundation are the robo-advisors, which use AI to automatically recommend portfolios based on customers' risk tolerance, investment horizon, and financial goals. These platforms continuously rebalance portfolios as market conditions and customer profiles change, enabling scalable and personalized investing. AI also plays a critical role in predictive analytics. By analyzing historical prices, market trends, news sentiments, etc., AI models can help forecast asset price movements, And these help fund managers in making more informed buy, hold, or sell decisions. So AI can simulate thousands of economic scenarios such as interest rate hikes, inflation, and many more historical events. And as an example, AI sector predicts the performance trends, allowing portfolio managers to rebalance holdings before any major market shifts. Moving on to the next slide, we will talk about AI in transforming foreign exchange forecasting and treasury operations. So areas where speed, accuracy, and timing are very critical. AI-powered forecasting models analyze historical exchange rates along with macroeconomic indicators, interest rate movements, and even geopolitical movements to identify currency trends. Unlike traditional models, these systems continuously learn and adapt as new data comes in. So, in treasury operations, AI plays a strong role in anomaly detection. AI also supports portfolio optimization by automatically balancing risk return. So, AI, for example, an AI model can predict currency volatility, enabling the treasury team to hedge fund exposure more effectively. Now, we have talked about how AI is transforming the banking sector. So, a short slider about what are the future skills for bankers in the data era, in the AI era. So, definitely the first is the data literacy, turning numbers into insights. So, there are, understand what data represents, customers, risk, performance, learn how to interpret dashboards, trends, and the model outputs. So because the bankers are the ones who are the decision makers, so they should be able to interact with data, they should be able to talk to data, they should be able to use various digital tools. Technology should be a teammate. Familiarize themselves with AI enabled tools like Excel Copilot, Power BI, CRM analytics, etc. Customer empathy, the human edge AI can't replace. So this is also one of the most important skill for the bankers: customer empathy, active listening, emotional intelligence, and understanding customer emotions. Ethical decision making, so we spoke about it. Reviewing AI driven credit decisions before making the final decisions. AI assistants and co-pilots learn to collaborate with AI assistants like ChatGPT or other co-pilots. Use AI to augment decision making, generate insights, and free up time for higher value tasks. For example, you can use ChatGPT to draft customer communication or analyze market trends quickly. So use AI as a teammate, not something that is going to replace you. So emerging AI trends in the banking, we have AI co-pilots, we have voice banking, and then ethical AI. Ethical AI will always remain a part of the AI systems. And now maybe we'll do a quick poll. How comfortable are you using AI tools in your daily work? So we have few options. I would like you to answer them. I'll put the poll in the chat. Okay, so now I think you have the right link in the chat window. So just join this quiz and share your responses. I'm also sharing the QR code just in case you want to join from here. So we have around 14 seconds remaining. Okay. Good to see we have some responses, and some of you are very confident in using AI tools in your daily work, and some of you are somewhat confident, and that's good. So therefore, going forward, I'm sure all of us are going to get very confident in using AI tools in our daily work. They are going to be a part of our bread and butter. So, but good to know that some of you are very comfortable already in using AI tools. We have various options like data analytics, fintech innovations, blockchain, latest AI trends, and the key takeaway is like, technical depth is optional. Awareness of emerging tools ensure future ready skills. You might not be, really be interested in knowing how AI systems are working, but it is important that you're quite familiar with the tools. And small experiments in AI, blockchain, analytics can have a significant impact in banking. Going forward, we'll have AI co-pilots, which are becoming everyday assistants for our bank employees. They support relationship manager, risk analytics, and operations team by summarizing information, suggesting next actions, and highlighting risks or opportunities in real time. We'll have voice banking. Voice banking is rapidly evolving beyond simple IVR system. So we'll have AI-powered voice assistants who can now understand context, intent, and the emotion. So not just voice-based uh, chat system where a chatbot is speaking and a user is listening. Instead of that, we are going to have a system, an AI-powered system, who can understand the context of the customer chat, the intent, and as well as the emotion, enabling customers to perform transactions, get account insights, or seek support. And we should not forget that we are all responsible for maintaining ethical and responsible AI. Together, these trends show that the future of AI in banking is not just about smarter technology, it's about human centric, trustworthy, and responsible innovation. So that's it from my side. And I would like to thank you all for the engaging participation.
Thank you, Mansi. That was great. The session was very engaging. A lot of questions. I hope everyone had a good time.